It's 5 a.m. in New York City. Good morning. I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ramping up pressure, oil rallies as President Trump orders a blockade of sanctioned oil tankers going into and leaving Venezuela. Fresh curbs. The U.S. is said to be preparing a new round of restrictions on Russia's energy sector if President Putin rejects a peace deal with Ukraine. And a win for Aamzon. OpenAI is said to be in talks to raise at least $10 billion from the online retailer and to use its chips. Well, checking in on these markets, and we have futures pointing higher stateside. A touch. Not much market reaction yesterday after that jobs data. Let's be honest, there was something in it for both the Hawks and the Doves. Treasury yields are looking pretty steady, higher 2 basis points across the curve. The 10-year is currently at 4.16%. And we have major moves when it comes to the oil market. Both WTI and Brent up on this U.S. blockade of Venezuelan tankers and the U.S. preparing Russia sanctions if there's no peace in Ukraine. More on that in a moment. But for now, cancelling out that downward pressure from the oversupply concerns. And gold there also flirting with the record set in October. That's $4,381 a troy ounce. We're not quite there yet, but that on the safe haven demand. Now let's get to our stocks to watch. Here's Valerie Titel.
Good morning, Lizzie. Let's start with what's going on in the media space, this media merger frenzy. We've had news from the Wall Street Journal that the Warner Brothers board is preparing shareholders to reject the Paramount Skydance deal. So we're seeing shares of Paramount in the red, down 0.7%. It's a double whammy of negative news for Paramount Skydance. We also heard that Jared Kushner's fund, Affinity, is pulling equity that it did pledge the Paramount deal. So we're seeing shares of Netflix rise off the back of this. Remember, they are the other suitor in this hostile takeover, and Warner Brothers Discovery shares down 1.2% off the back of that as well. Well, let's move on to the airline industry. Some news here. We have Spirit Airlines in talks with Frontier on a potential merger that could save Spirit Airlines from insolvency. We're seeing shares of Frontier leap near 5% higher in pre-market trade. Lizzie, a combined Frontier Spirit Airlines would rank the 5th largest in the U.S. if this deal was to come to fruition.
All right, Valerie, thank you so much. We've got one more.
And one more just to check on the oil majors. Lizzie, I just want to mention they are some of the biggest gainers in the Euro Stock 600 this morning. This is on the back of oil rising from those year-to-date lows. We're seeing the likes of Shell up nearly 2% and BP here listed in London up 2.5%, lifting the FTSE this morning. These oil majors are really carrying the Euro Stock 600 higher in Europe.
Oh, perfect. Well, we're going to dive into that theme more throughout the programme. Valerie, we'll see you later on in the hour. And coming up in this hour, we're going to be speaking to Cayla Seder of State Street as stock futures rebound after a 3-day slump. But first, let's get back to that oil rally rising on geopolitical risk. Bloomberg's Will Kennedy's following President Trump's order of a complete blockade of sanctioned oil tankers in Venezuela. And we've got Oliver Crook tracking the developments on the latest sanctions on Russia's energy sector. So, Will, let me start with you. What does President Trump actually want from Caracas? It's not clear what land and assets he's accusing Venezuela of stealing.
Well, I think ultimately the Trump administration appears to want a change of regime in Caracas. He is interested in the oil that Venezuela has. I think he probably sees that as an opportunity. So he has ratcheted up pressure on the regime, and we've seen that in a number of ways through these strikes on boats that he claims are exporting drugs from Venezuela. Through sanctions, and now seizing that tanker last week, and now this wider blockade of oil exports from Venezuela. He's clearly trying to squeeze the Maduro regime economically.
Of course, Venezuela is an OPEC plus member, but how much of the oil market does Venezuela have?
It's not a huge player anymore. We've seen over the 25 or so years that we've had this socialist government in Venezuela that its role in the oil market is steadily diminished, and right now it's only exporting about 500,000 barrels of oil a day, and that's in a context of global oil demand of more than 100 million barrels a day. So it's become a fairly marginal player, but that's not to mean that it couldn't be significant again in the future. It's sitting on top of some of the world's most enormous oil reserves, and with international investment, with a less politically manipulated oil industry, it could probably increase production again. And I think that one of the things that the Trump administration, sees there is the opportunity to play a part in the revitalization of a Venezuelan oil industry.
OK, well, we'll stay with us. Ollie, I want to bring you in. What are the sanctions on Russia likely to be that the US is threatening?
Yeah, so there's been a lot of question about how the Trump administration is going to bring Russia to the negotiating table if there is a failure on the Russians to agree on this sort of intense peace proposal and negotiations we've got from the United States over the last couple of weeks. We know the pressure that they're willing to exert on the Ukrainians. It is fairly easy for them to do so because of the dependencies that Ukraine and the Europeans have on the United States. But it has been less clear until today what they are considering doing to the Russians. And what we understand is that the Treasury and the U.S. are thinking more broadly about adding additional sanctions on the Russians if they fail to come to the negotiating table, if they reject what the U.S. considers to be a reasonable proposal. And that could be additional measures on the Russian shadow fleet, on the high seas, and as well on some of those that are trading oil and natural gas, or say oil and other potentially fossil fuels on the Russian side. That would, of course, try to put more constriction on the revenue that is driven a lot by the fossil fuels for the Russians. And that is, of course, what is funding the war machine in Russia. So it's seen as really quite potentially consequential, particularly from the European and the Ukrainian side, because there's been a lot of question about whether or not Trump is willing to move any further. But it does fall short, Lizzie, of those massive sanctions, the ones that have been put forward by Lindsey Graham that do have bipartisan support in the Senate at the United States. And those are the secondary sanctions. That would be really the kind of nuclear option to going after the sort of the countries that are still buying Russian crude oil. This would be massive tariffs that the United States would impose on third-party countries like China and India and others who still buy Russian crude oil. We're still talking something that is quite short of that.
So the question becomes, Ollie, how likely all this is to bring President Putin to the negotiating table. Trump, of course, hoping for a ceasefire by Christmas.
Yeah, well, listen, I think we're not quite there yet. We haven't had quite the reaction from the Russians on the latest slew of negotiations over the last couple of days in Berlin. Of course, the Europeans were talking very positively about it. The Ukrainians were as well. There's still a lot of outstanding issues, particularly on the concern of territory for the Ukrainians. But we have not got a reaction yet from the Russians. We had some sort of comments from some sort of less senior foreign emissaries within Russia that were making sort of positive noises. But we need to get the full readout of the reaction of that 20-point plan from the Russians, which we have not got yet. That being said, we should say that just a couple of weeks ago, those sanctions on Rosneft and Lukoil went into power. That is a way that is putting a little bit more long-term pressure on the Russians. And we should say that in terms of the barrels of oil, we're talking about Brent today that are about around $60, and that, coming down significantly over the last couple of months. For the Russians, they're only getting about $40 a barrel for a lot of what's being traded on the high seas, and that's come down about 30% over the last 3 months. So there is pressure from that side of things that is being exerted on the Russians. We'll see if it really comes to bear in the negotiating table.
So, Will, Brent at $60 a barrel now, but it had been $55 yesterday on WTI. So then what happens if you take out the Venezuela story and focus on the Ukraine story? Where's the floor?
So, as Ollie's just described, we got these use of sanctions by the Trump regime. He's very keen to use energy sanctions to try and get what he wants politically around the world, and that does, at the margin, exert some upward pressure on prices. But I think the broader background is that we're in a market currently which is oversupplied. We are producing more oil than the world is using every day, and we're seeing that surplus build up on oil tankers around the world and on storage tanks. And I think we see a bit of an uptick today, but the longer-term story into the middle of next year is broadly bearish. And I think the other way to think about it is, in both situations, if Trump gets what he wants, i.e. a new government in Venezuela and a peace deal in Ukraine, both of those things could ultimately be bearish for the crude oil price, because you've got a Venezuelan oil industry that's now free of sanctions with the prospect of American investment, and you've got probably the roll-off of some sanctions on the Russian oil industry. So in the short term, you're seeing that uptick. I don't think it's doing much to change the longer-term picture. All
right, let's see how much of Trump's Christmas list he actually gets. Bloomberg's Will Kennedy and Oliver Crook, thank you both so much for your analysis. Now let's get to some other top stories trending on the terminal this morning. UK inflation slipped to its lowest level in 8 months. Consumer prices rising 3.2% in November after a 3.6% increase the previous month. The figures have prompted investors to ramp up bets on lower borrowing costs. Traders now see the drop as all but sealing a rate cut when the Bank of England meets tomorrow. Elsewhere, Tesla sales in California are poised to be suspended for 30 days if it doesn't change its marketing practices. According to the state's motor vehicles department, Tesla's allegedly misleading consumers about its driver assistance technology. The suspension won't take effect for 90 days to give the company time to appeal or come into compliance. And SpaceX has told its employees that the company is entering a regulatory quiet period, taking the company a step closer towards an initial public offering slated for 2026. According to sources, employees were told to refrain from commenting on the company's IPO plans, including topics such as its growth or valuation. A quiet period for Elon Musk, imagine. Well, coming up on the programme, OpenAI in talks to raise at least $10 billion from Amazon. We'll bring you more on that next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Now, OpenAI is in initial discussions to raise at least $10 billion from Amazon. Bloomberg sources say that the deal under discussion could value OpenAI north of $500 billion and see it adopt Amazon's Trainium chip. Bloomberg's Peter Elstrom joins us now for more. Peter, another potential mega deal here involving OpenAI. How significant is it for some?
Yeah, so many deals in AI these days. It's a big deal both for OpenAI and for Amazon. Again, it's preliminary talks. We don't know whether it's going to go through at this point, but it is a big deal. First of all, for OpenAI, we've seen Sam Altman and OpenAI diversify their bets both on the chip front and on the data center front in a number of different ways. You'll recall it was not that long ago that they only used NVIDIA chips and they were only working with Microsoft as their data center provider. They'd gotten investments from Microsoft. On the data center side, we've seen them diversify. They're using Microsoft and Oracle and SoftBank so that they have some options within that area. On the chip front, they're trying to do something similar, although it's harder because NVIDIA has such a lock on AI chips at this point. So they're primarily using NVIDIA chips. They have said that they're going to use AMD chips, and now they're in these discussions with Amazon to be able to use their chips within their data centers, too. It gives them some options in terms of suppliers. It probably brings down the cost a little bit, and it gives them a little bit more potential going forward.
So then what does it mean for Amazon and its long-term chip strategy?
Well, Amazon is interesting. Amazon, of course, effectively invented the cloud computing business. They're the leader in that field. But as we've transitioned from traditional cloud computing into AI cloud computing, they're a step behind. They've been losing out a bit to some of these other providers, including Microsoft has a lot of momentum. Oracle now actually has a lot of momentum, too. They would like to be able to use these Trainium chips that they've been building internally to be able to compete on that AI cloud computing front. So this would be a bit of a validation for them if they can get OpenAI on their side to use those chips.
Okay. Also, we've got to talk about the fact that there is yet another billionaire coming out of Chinese chips. Tell us more about MetaX and its founder.
Crazy. Yeah, MetaX, not to be confused with Meta in California. MetaX in China went public. Their stock went up almost 700% in the local market there. The valuations at these companies are getting a really incredible. MetaX's valuation now is $47 billion. It's not a small company. And this, as you were referring to, this comes just shortly after more Threads went public. And their valuation is about the same, almost $50 billion. So these are pretty big companies. Say there's a lot of retail investor excitement around the AI investment opportunities within China. Yeah. They know that the Beijing government is keeping out NVIDIA chips and some of the competition right now. They also know that a lot of money is going to be spent on this front, so they see opportunities in front of them. The valuations, again, are a little dizzying at this point, but they're getting a lot of momentum.
So how does that compare then with the AI story in Europe and the US?
Well, in the U.S., NVIDIA is certainly far ahead. AMD is far ahead of these companies. They also have their chips made by TSMC, so they have much more sophisticated manufacturing. In China, they need to lean on SMIC primarily to be able to do this. So their chips are not as sophisticated. Their designs aren't as sophisticated. but they have support from the local companies and they have support from the local government, so there are some opportunities to make some money.
Okay, really fascinating. Joining the dots for us, Peter Elstrom, we thank you as always. Now, in other deal news, Jared Kushner's Affinity Partners is exiting the takeover battle for Warner Brothers. Let's get more now with Bloomberg's Manuel Baigorri. Manuel, good to see you. We've got Kushner's Affinity Partners exiting, as I say. It's no longer backing Paramount Skydance's proposal. Why is Kushner pulling out?
Exactly, Lizzie. It's another step in this saga. It's quite a drama, but exciting, obviously, to watch us. It's a very transformative move. The latest, as you said, Lizzie, Affinity walking away from Paramount's bid. Obviously, it's another blow politically and financially for Paramount's chances to get this successfully done. But at the same time, we understand from sources that Warner Brothers is about to reject publicly Paramount's bid and also urge shareholders not to tender the shares in the hostile takeover offer. So yes, a very significant move by Affinity and Jared Kushner walking away from the deal at this very critical junction right now. But itself, the deal became very, very controversial, very political. So there is also clear reasons why he might have decided to, not participate on this transaction anymore.
So they're Kushner's reasons, but what about the reasons for Warner readying its rejection of Paramount's hostile bid? What do we know? Is it just about the money?
Yes, mostly. I think there is the money, as you said, the financing, the terms offer. I think there was a little bit of concerns about the structure around the financing package and whether or not that could backfire, down the line. But obviously, I think there is an agreement in place with Netflix, which Warner Brothers believes provides more value over time strategically, and that they feel apparently more comfortable with, even if on paper, theoretically, the two different proposals, right? One headline number might be lower than the other, but also the structures are different. So kind of like different bids on the table. But yes, definitely the financing and the terms offered by Paramount were a big concern behind this reasoning.
So Netflix up in the pre-market, Manuel. What more do we know about what they'd actually do with Warner? Obviously, concerns about the end of cinema, perhaps.
Yes, definitely. I mean, they're going to get a lot of market share, right, in streaming. So Netflix has been very, very successful. They obviously are the clear dominant. And by also getting potentially HBO, that may also raise questions in terms of antitrust. Remember, even Donald Trump said that he would personally get involved in the review of this transformative deal for the industry, not just in the U.S., but also globally will have ramifications. So it is clear that antitrust will raise some questions there, and that people will be very, very closely watching this transaction, whether or not it will get materialized. But I think more imminently, we might see something more formally from Warner Brothers potentially rejecting or urging shareholders to reject Paramount's bid as soon as today.
OK, we'll keep an eye on it. Bloomberg's Manuel Baigorri, we thank you for the latest on that deal. And coming up on the brief, police charge alleged Bondi Beach attacker with 59 offences. More on that and a look at what else is making headlines on your front page news next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Time now for your front page news. First up on the BBC, the surviving suspect in Sunday's mass shooting at Bondi Beach, Naveed Akram, has been charged with 59 offences. The charges include 15 counts of murder and committing a terrorist act. His father, 50-year-old Sajid Akram, was killed in an exchange of fire with police. Next up, we turn to the New York Times. A person close to the Reiner families provided a detailed account of events that occurred before and after the killings were discovered. Nick Reiner has now been charged for murder over the deaths of his parents, Hollywood director Rob Reiner and Michelle Reiner. The person close to the family said that nothing in recent weeks suggested that Nick would be capable of such violence. Finally, we turn to the Financial Times, and JP Morgan withdrawing almost $350 billion in cash from its account at the Federal Reserve since 2023. Much of that money was used to buy US government debt, the move allowing the bank to lock in higher yields in anticipation of rate cuts. Just quickly checking in on your markets, we have futures pointing higher into today's session following the gains in the European session that we've seen already. The dollar up 0.3%, and you're looking at the 10-year up 2 basis points. Similar moves across the curve, but the real action is in commodities. You've got major moves in oil this morning, both WTI and Brent up on both the US blockade of Venezuelan tankers and the US preparing Russian sanctions if there's no peace in Ukraine. So more on all of this, but cancelling out the downward pressure from the oversupply concerns. Gold there also up about 0.5%, just shy of a record. The record is $4,381 a troy ounce. We're not quite there yet, but we are seeing that safe haven demand. Silver already having hit its record. Coming up on the brief, stocks climb, the dollar rebounds from its 2-month low, and we'll catch up on all of that with Cayla Seder of State Street on investors' risk appetite heading into 2026. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Lizzie Burden in for Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. Ramping up pressure. Oil rallies as President Trump orders a blockade of sanctioned oil tankers going into and leaving Venezuela. Fresh curbs. The U.S. is said to be preparing a new round of restrictions on Russia's energy sector if President Putin rejects a peace deal with Ukraine. And a win for Aamzon. OpenAI is said to be in talks to raise at least $10 billion from the online retailer and to use its chips as well. Well, checking in on these markets, and we have US futures pointing higher as we head towards today's session, tracking the gains that we've already seen in Europe. And after yesterday's jobs report was pretty meh, to be honest. Something in it for the Hawks and the Doves, delayed and deeply flawed technically as expected. But if we look at the Treasury picture, we've got yields higher across the curve by about 2 basis points. You're looking at the 10-year there at 4.16. And really, the major moves today are in commodities. Take a look at the oil space. We have Brent there at $60 a barrel now. We've seen gains, as I say, because of this blockade of Venezuelan tankers and the US preparing Russian sanctions if there's no peace in Ukraine, cancelling out the downward pressure from the oversupply concerns. But gold there as a safe haven, drawing attention, up 0.4%, but still just shy of its record. Let's get to your stocks to watch now. Valerie Teitel is back with those. Val.
Good morning, Lizzie. Let's start with a check on the drama in the media space. It appears that Paramount might be out of the takeover race for these Warner Brother assets. We're seeing shares of Netflix up 1.8%. Warner Brothers Discovery in the red, down 1.3%, as we're likely going to lose Paramount as a suitor. Not only is Jared Kushner's Affinity Partners pulling equity from the deal, but it has been said that Warner Brothers board is going to be recommending shareholders to reject Paramount Skydance's offer. Are we going to get a deal on this side of Christmas? Time, I guess, is on our side now. Let's move over to the airline industry. I want to talk about Spirit Airlines, the deep discounted airline, might be saved from insolvency. We're reporting that they're in revived talks with Frontier Airlines on a potential merger. We're seeing shares of Frontier jump near 5% in pre-market trade. Lastly, I want to check on the oil majors. One of the big movers in the European session to the upside. We're seeing oil rebound from year-to-date lows off the back of news of this Venezuela blockade, plus U.S. threatening more sanctions on Russia if no peace deal comes to fruition. We're seeing shares of Shell jump over 2% and BP up nearly 2.5% in the trade in London. Lizzie?
Valerie, thank you so much. Now to the broader market, State Street's Cayla Seder weighing in on markets' risk appetite as futures bounce back after a three-day dip in the S&P 500. She writes, quote, although turbulence may remain elevated and concentration risk will remain high, we don't see major red flags on the liquidity or credit fronts. This means we are still in a buy-the-dip opportunity. And I'm pleased to say that Cayla joins us now for more. She's the macro multi-asset strategist over at State Street. Good to see you, Cayla. How big do the dips have to be buyable then?
Hi, Lizzie. Thank you so much for having me. So yeah, I do think there's a lot to be optimistic about, and I do think risk appetite will pick up into the new year for a couple of reasons. One is that when we look at credit conditions still look okay. The second thing is when we think about liquidity still looks to be okay. I mean, at the last FOMC meeting, we had the Fed come in and say, hey, we are going to buy bills to ensure liquidity and reserves remain ample. So that's a good thing for overall market functioning. Additionally, when we look at things like turbulence and systemic risk, our measures of systemic risk still remain relatively low. Turbulence has picked up a little bit, and this could continue, and I think this kind of reflects some of that concentration risk. But when we look at where that concentration is concentrated, it's really heavy in high quality parts of the market. And so I think that's going to continue moving forward. And so when you take all of those factors together, I think we're in an environment that's still very resilient for risk.
And if we go back to the US economic data yesterday then, Cayla, we had something in it, as I say, for the hawks and the doves. Anyone can illustrate their argument as they please. Did it change your view for Fed cuts next year?
Yeah, I think, like you said, there's kind of something for everyone in the data we got yesterday. It doesn't materially change my view. I do think we're in an environment where it's prudent for the Fed to maintain on hold for a little bit. And part of that is because when we look at the labor market data, for example, it didn't provide a lot of clarity. You still see issues with demand, but you also see issues with supply. And so I think what that means is, let's take a step back. The Fed did just ease a total of 75 basis points over the last couple of months. Let's see how that feeds through into the economy, especially because inflation is still elevated. So I think the Fed just wants to wait and see, how is the labor market developing, especially once we start to get further out of this lack of official data fog.
So given how flawed that data is and delayed, is it the case that actually the race to become the next Fed chair and the Fed speak is going to be what dominates markets' minds in the short term? We know that Chris Waller is going to see the president for his interview now.
Yeah, I think Fed speak is really going to be what's driving markets in the short term. We've seen this a lot around headlines around who could be the next Fed chairman, and I think that's going to continue moving forward. I think one thing that's important to consider too is what is the makeup of those regional Fed presidents and how hawkish or dovish could that tilt shift? And one thing that we've seen is we expect kind of this more hawkish tilt from Fed presidents to continue into 2026 because you have Hammack and Logan that are joining and swapping out Schmid and Mussolem. And so you still have kind of more hawkish folks that will be voting next year. Now, what has driven kind of this divergence between the board being less hawkish relative to regional members, and that driver has really been inflation. And so I think what's really important when it comes to Fed speak is thinking about what is happening with inflation and what is happening with inflation expectations. If inflation expectations begin to rise, I would expect more of that division to continue or even make the Fed a lot less dovish.
OK, so you've still got the counterweight of the hawks, but out of the three, the Kevins and Waller, who's got the most credibility in markets?
I think all of them are qualified. I think it's hard to make a case that they're not. I think Waller and Warsh, they do have a lot more experience at the Fed. I think one thing to consider too with a Warsh is you could be in an environment where you could have a stronger dollar because he's considered a bit more hawkish than the other options. But with that said, I think the overall expectation continues to be that we'll be in an environment where the Fed's next move is going to be a cut, no matter, which of those three are running the Fed.
But let's say the Fed doesn't cut as much as the market expects. How much would that hold back U.S. stocks?
That's a great question. And I think that's where that concentration really comes into play and where that allocation comes into play. Because if allocation was in very rate sensitive parts of the market, I would be a bit more worried because we think, the Fed is in a good place to stay on pause for a prolonged period of time. That's not the case, though. Allocation is towards really strong sectors that have less interest rate sensitivity. And so I think that can really underpin the U.S. market from here, even if we don't get Fed cuts as early as the market expects.
And in terms of the AI theme, beyond big tech, who do you expect to see benefiting from AI first? And when does that actually spread out and broaden?
Yeah, that's a great point, because I think this AI theme is going to continue for a while, and it's going to continue to be a factor in growth more broadly. We heard Chairman Powell even mention AI growth and a driver of GDP, and how the Fed increased their GDP forecast, not just on consumer spending, but also on AI investment. And so I think it can be this tide that slowly lifts more and more boats. A couple of places where we're looking at that now are places like utilities, places like industrials, very much so tied to the build out of AI. But there's other options too, potentially in places like healthcare. Now, healthcare has been really interesting lately in our data because it had been the most underweight sector in our data set. And we started to see a lot more buying within that healthcare space. Now, I don't think that has, I think that's more to do with positioning than it does with AI. But I do think that was perhaps an underappreciated part of the market that does have more opportunity for net upside and is not a very crowded trade from here.
OK, lots of optimism there. Cayla Seder of State Street, we appreciate it as we end 2026. Good to see you. Thank you. Well, now to some other top stories trending on the terminal this morning. Jared Kushner's Affinity Partners is exiting the takeover battle for Warner Brothers. The move comes as Warner plans to reject the Paramount Skydance bid that his private equity firm backed. According to sources, the involvement of Kushner, who is, of course, President Trump's son-in-law, drew a lot of unwelcome attention. President Trump had said that he would personally review the deal. Elsewhere, SpaceX has told its employees that the company is entering a regulatory quiet period, taking the company a step closer to an initial public offering slated for 2026. According to sources, employees were told to refrain from commenting on the company's IPO plans, including topics such as its growth or valuation. And we'll be watching the year's biggest IPO. Medical supplies manufacturer Medline priced its shares near the top of the marketed range. It sold over 200 million shares for $29 each, giving it a market value of about $39 billion. Well, coming up on the programme, oil extending its rally as the US ramps up pressure on Venezuela and on Russia. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Geopolitical tensions mounting worldwide as President Trump orders a blockade of sanctioned oil tankers going into and leaving Venezuela. The Venezuelan government responding in a statement, writing, Trump intends to impose in an utterly irrational manner a supposed military blockade of Venezuela with the aim of stealing the riches that belong to our homeland. Oil rallying on the news. So let's get more now from Washington with Kate Ackley of Bloomberg Government. Good to see you, Kate. Just talk us about how that pressure on Caracas is likely to escalate.
Well, this is obviously an idea that would escalate the pressure on Venezuela. And you're seeing that come from Washington, as the military presence is, also building in the region. So this is one piece. This is sort of the economic piece. And then you also have the military might piece going on as well, all aimed at ratcheting up the pressure there on Venezuela.
And in another escalation, you've got the US preparing a fresh round of sanctions on Russia's energy sector to push President Putin, of course, to the negotiating table. How stringent could those sanctions be?
Well, we might see those unveiled as soon as this week, if that does go into place. Again, this is all in pursuit. President Donald Trump is trying to sort of broker a peace deal there in Ukraine, between Ukraine and Russia. And this is yet one more piece in that puzzle of, trying to lean on Russia. Russia obviously is not going to be happy with this, but these early reports indicate that could be quite stringent, targeting Russian oil.
Yeah, we just have a line crossing from Italy's Giorgia Meloni, the Prime Minister there, of course, speaking to lawmakers ahead of the EU summit. She says that the US and the EU should work together to reach peace in Ukraine. So, of course, the president adding his pressure in the form of those sanctions, and we'll see what they will be. But we're going to hear, Kate, from the president himself later on at 9 p.m. Eastern time. He's going to deliver a prime time address. I wonder what he's going to be saying.
Well, we saw last week with the rally in Pennsylvania, sort of this official or unofficial kickoff to the 2026 midterm campaigns. And so this is the president's opportunity to sort of speak directly to the American voters, the American public, talk about what the successes are of his agenda this year in 2025, and then look ahead to 2026 and the midterm campaigns, what's going to be on voters' minds, still rising costs or just the continued high cost of living that a lot of voters say that they feel in polling and other things. But expecting President Trump to really take credit for wins of this year, talk about the things that he and his administration are going to focus on in the new year as the midterm campaigns really, really notch up here in the United States.
All right, a victory lap for the president. 9 p.m. Eastern time. I'm sure we'll be watching closely. Kate Ackley of Bloomberg Government in Washington, we thank you. Now, let's turn to tech. Aamzon rising in the pre-market. Bloomberg learning that OpenAI is in early talks to raise at least $10 billion from the online retailer. The deal under discussion could value OpenAI north of $500 billion and see it adopting Amazon's Trainium chip. Well, Bloomberg Tech Europe anchor Tom McKenzie joins me now for more. Tom, just how significant is this deal for OpenAI?
Well, it's a reminder that there's a couple of key things that continue. One is OpenAI, which is going through this red alert moment in trying to catch up with Gemini 3.0, which has had a lot of success and is being adopted very quickly. When I say catch up, I mean holding their market lead versus Gemini 3.0. And the fact that they will continue these investments and these deals to fund the build out of the infrastructure they think is needed to continue to innovate and develop and scale these models to the kind of point where they want to get them to. So $10 billion US, not insignificant even for a company like OpenAI that is raising hundreds of billions from various different partners. And it's the partnership, to your point, and the use of Amazon's chips that is significant as well. So it's also an OpenAI that is looking to diversify away, to some extent, from NVIDIA. Really, really interesting in terms of the complexity of the relationships, given that Amazon was an early backer of Anthropic, which is a big competitor to OpenAI, particularly when it comes to enterprise large language models and chatbots. And then, of course, the fact that Amazon itself competes very, very directly with Microsoft, particularly in the cloud space, Microsoft having that 27% stake in OpenAI. So it's a reminder of a couple of things. One is OpenAI is not walking back from its commitments in terms of raising new capital as it burns through cash at a rapid pace and is not going to be profitable, at least for a number of years. And it's a reminder as well that there are new chips now in the market, and that could become more of a theme in 2026. OK,
and potentially really crucial for Amazon's long-term chip strategy as well. I also have to talk to you about this new billionaire that's emerged out of Chinese chip making, because, of course, you also spent a long time in China. Tell us more about MetaX and its founder.
National champions, and that is the focus. And investors are rewarding companies that lean into Beijing's policy around national champions, particularly in the semiconductor space. Any company that is even getting close to taking market share from NVIDIA will be rewarded, and we had a reminder of that today. So Meta X soaring around 700%. They raised whopping. I mean, it's like head spinning, and you do get a bit of a herd mentality in China around these IPOs, and they are slightly restricted. So the pipeline of IPOs has been curtailed by authorities for various reasons, and so that has pushed up the price as well. It's been one factor. But the key driving factor is this is the kind of company that is, from investor perspective, well positioned to potentially kind of close the gap. Their latest chip, they say, is just close to the H100, NVIDIA's H100, not far behind NVIDIA's H100, which was just a couple of generations behind the kind of GPUs that NVIDIA is putting out right now. And the former executives, 3 key founders of Meta X over in China, formerly at AMD as well, which of course makes those GPUs and competes with NVIDIA. So they have that experience. They're taking it now and trying to build that in China, where they have about 1% market share, according to the prospectus.
The interdependencies in this world of AI, the CV crossovers just blow my mind. All right, Tech Europe anchor Tom McKenzie, we thank you so much. Now to the auto space. The California DMV warning that Tesla's sales in the state are set to be suspended for 30 days if it doesn't change its marketing practices. Let's get more now with Bloomberg's Craig Trudell. Craig, what's so wrong with the marketing at Tesla?
Yeah, this specifically has to do with autopilot and what Tesla has marketed as full self-driving. Both of those, their critics have long argued are misnomers. I think with autopilot, it's maybe less egregious an issue. With full self-driving, it's particularly been a problem in that what Tesla is selling is a system that enables, some automation of certain tasks, but you, the driver, are in control, are responsible for if it crashes. And so to call it full self-driving has been something that's been kind of a lightning rod for criticism for some time. And the California Department of Motor Vehicles has the ability to sort of weigh in here and has a means to sort of enforcing its view by preventing companies from being able to register new vehicles in the state. So that's why it's able to kind of come in here and exert itself after some time of investigation and deliberations with the company.
And of course we know that Tesla's in a race with Waymo, Craig. Waymo, Alphabet's autonomous driving unit, in talks to raise more than $15 billion, so near a $100 billion valuation. What would that money do to enable Waymo to compete better against Tesla?
Yeah, I think, Waymo has been playing a different game, right? They have vehicles that actually are capable of operating without anyone behind the wheel or without, safety operators in the passenger seat, even for Tesla in Austin, Texas. I do think, while they have absolutely made a lot of progress the last couple of years with deploying in more and more cities with these driverless vehicles, they have done so in a very sort of slow, deliberate, careful way. Some of that is likely due to safety concerns, but a lot of that also has to do, in all likelihood, with the economics of this robotaxi model not being there. So they need to keep raising money to fund that expansion.
All right, Craig Trudell, we thank you. Stay with us. This is Bloomberg. This is Bloomberg Brief. I'm Lizzie Burden in London. Let me take you through what's on the diary today. We have Fed speak coming from Waller, Williams and Bostic throughout the day. Waller in focus, of course, because he's got an appointment with the president about potentially being the Fed chair. That interview later on. We'll also get earnings from General Mills and Micron. Plus, the president's going to address the nation at 9 p.m. Eastern Time. Checking in on what's happening in these markets, and we have to look once again at these oil markets. We've got Brent up 2.4% at $60 a barrel. Two drivers: the U.S. blockade on Venezuelan tankers and the U.S. preparing Russian sanctions if there's no peace in Ukraine. That does it for Bloomberg Brief. Surveillance is up next. This is Bloomberg.